What's up, guys? Welcome to the weekly technicals live session for February 10th, 2019, and we are looking at the economic calendar. Then we'll dive into the technicals portion of this video. But looking at the upcoming news releases for the week, you guys can see that tonight during London we should see some volatility in the cable, so British Pound USD. We've got 3 high impact news events for British Pound as well as a medium impact release, all coming out at 1:30 a.m. Pacific Standard Time. So a little late during London session, but nonetheless we should definitely see some injections of volatility for that pair around this time frame. So going into Tuesday, we have some more British Pound news, which is New York session. And for London session, we have a medium impact Euro news. And then later in the New York session, we do have some dollar index news. And for that Tuesday Asia session, we have a bunch of New Zealand dollar news. So if you guys monitor that pair New Zealand dollar USD or NZD USD, you guys can check that out around Tuesday during Asia session. We should see some heavy volatility within that pair, considering we've got about 5 high impact news releases for that specific pair. Then going into Wednesday, we have both high impact news for British Pound and dollar index for London and New York session. So 1:30 a.m. British Pound, 1 high impact, 2 medium impact, and for New York session we've got 2 high impact, which is core CPI and CPI for dollar. And then later in New York session, we've got New Zealand dollar high impact news. So British Pound, we should probably see a lot of volatility in that pair this week, considering that we've got a really good amount of high impact news events. And then going into Friday, we've got medium impact for British Pound during London, and then in New York session, we've got some more dollar index news. So overall, we should definitely see some injections of volatility this week, and see a relatively large weekly candle. So once we get into the charts, we'll talk more about that. But when you see a news calendar kind of like this, where we have no NFP, no FOMC, no real issues within the economic calendar in terms of rate announcements or major events. We've got just typical news events, but we've got multiple high impact news events surrounding both USD and British Pound. So most of the majors we should see a good bit of volatility this week. But with that being said, let's go ahead, we'll jump into the actual technicals portion of this video, and we'll review the charts. Alright, so let's actually go out to a weekly. And here we are on a weekly for the dollar index. And if you guys take a look at this chart, you can pretty much see, from the overall trend, we've got a bullish trend, right? We've got a low, then the market came all the way up, broke above this high, so now we've got a weekly break in structure. We've came back down, retested that as support, came all the way back up, made a higher high. Market came down into daily support, or I'm sorry, weekly support, and then formed a high. Then we've got a higher low, and now we are breaking to the upside, forming a higher high. So where would the next level of liquidity be? And this is what you want to ask yourself when you take a look at the charts for the first time in the week, right? We've got equal highs here, and the market has showed no real willingness to continue lower, right? So with that being said, we have to assume this market's going to continue reaching for the liquidity above these equal highs, which comes in at 97.70. And we'll look through for a continuation up into 98 big figure. So about 140 pips from where we're at now. And that is a reasonable amount to expect for the week. So when I just said, we could have a relatively large weekly candle, if we measure the pips on last week's candle, we've seen 107 pips. So imagine another 100 pips, right? We're looking for 140, which would take us above here. Right, so we can easily see that, and they can use the high impact news events around dollar index to inject that volatility and get us above our level right here, which is at 97.70 level. So if we come out to a daily, you can see it a little clearer. And you know, regardless of when you're viewing the market, there's always going to be liquidity both above and below the market. You just have to figure out which is the more probable scenario that the market will be reaching for, right? So in this case, we've got all of our liquidity marked out below the market. Okay, we've also got all of our liquidity marked out above the market. Now looking at this, with the market being all the way up here back at 96.60, what is going to be the more probable scenario for a run on liquidity? Do you think they'll come all the way down here for this low, or will they continue above this low with a continuation here and then above the equal highs? Right? It's more probable for a continuation on the upside because they're already here, right? So they're not going to want to take it from where they're at and bring it all the way down again, right? That just wouldn't make sense, right? So the probability factor here is they're going to want to continue this thing higher to at least offset the liquidity that's here. So once they run the equal highs, then they can take it lower. But based on the price action we've seen here, we've got low, high, higher low, higher high, higher low. Haven't made a higher high yet, but this is a new, basically a new swing. So you've got low, high, higher low, higher high, higher low, higher high. Market comes down, another higher low, equal highs are left in place. Market starts to unfold, go lower, low, lower high, lower low, lower high, lower low. Market stops at monthly support, comes all the way back up, fails to break above 97 big figure. One more final push lower, right? Offsetting anyone that's long this market. Now they're cleared out. Then they look to bring it all the way back up. So obviously I still want to see a continuation with a daily candle. So I want to see a daily candle close above 96.70, which we're, you know, very close to that. I just wouldn't expect them from where they're at now to want to take this lower. It just makes more sense for them to continue above these equal highs. Now once we get above that point, then they could take it lower. But obviously for this week, I'll be looking with the expectation of dollar index trading higher up into the 97.70 level and possibly a continuation into 98 big figure. So just a quick little lesson. You guys always want to, you know, analyze, and you want to mark out your liquidity both above and below the market. And if you guys are in the premium group, you know that this is something that, you know, we cover pretty much every single week whenever I'm breaking down the charts in Tuesday, Wednesday, and Thursday's daily technicals. If you don't know where that is, we basically sit down every single week, 4 times a week, once on Sunday, which is right now, and then 3 times during the week during you know, trading, so we can actually analyze what's happened the previous day and what we'll be looking for going into the next day. So that happens every single day, Tuesday, Wednesday, Thursday at 2 p.m. Pacific Standard Time. And if you're in the premium group and for some reason you don't have access to that, send me a message and I'll make sure that you guys can you know, participate in that as well. But back to the lesson here, you want to make sure that you're marking out both the liquidity on a daily chart below and above the market. And then from there, you want to analyze, you know, where are we at in price action and where is the next likely point for price to be reaching to, right? So we already know that we're here. The next daily liquidity will be resting here, here, and then here, right? And then again, once we get above that, then we'll determine whether or not, you know, if we're going to get a continuation or are we going to see weakness, right? And how we'll determine that is based on what is the chart telling us, right? What is the price action telling us? Do we get a daily candle closing above this level, or do we just wick above it and then we start trading lower, right? So you have to, you're not going to know as soon as it gets there, but you have to, you know, kind of analyze and be observant of what price action is doing around those key levels. All right, so just to sum it up for dollar index one more time, for this week, I'll be looking for a continuation above 97.70 and potentially up into the 98 big figure. Once we get above there, then I'll have to determine whether or not I'll be looking for continued expansion to the upside, or if I'll look for the market to move back into either a consolidation or start trading lower for the liquidity below us. But as of right now, we'll be looking and having the objective for higher prices on dollar index with the objective of seeking buy-side liquidity. All right, so let's move into euro dollar. All right, very similar scenario with this specific pair as well. So looking at this, you guys can see this is a weekly chart, and we'll just stay on this time frame for just a second so I can explain what's going on here. And you always want to do this to kind of get a more high level view of the marketplace. So looking at this chart, you guys can see we've got a high, market comes down, we form a lower low with the wicks here, so no real strength on the downside because the bodies of the candles aren't closing below yet, right? So then we come back up, form a lower high, trade lower one more time, another lower high, then we finally get a breakthrough there with a strong bearish candle below the weekly level. Okay, then we come all the way back up, clear out any liquidity resting above this high, but ultimately back within the weekly resistance here. Market sells off one more time, making a lower low. Then we've gone into a consolidation here for weeks, right? All the way since November 5th, we've just been consolidating for euro dollar, okay? If you look here, this move up ran out any liquidity above these highs, okay? From there, we seen weakness. We've seen one final push up, and then last week, it looks like we've got a decently sized bearish candle with, showing us relative weakness. So with this, we'll be looking for this market to continue expanding to the downside below this low first, which is the 1.1220 level. Okay, that's about 100 pips from where we're at now. Now refer back to the dollar index, we're looking for about 100 pips on the upside, right? So you guys know that, same thing we just did with dollar index, it makes more sense for this market to clear out the liquidity below the market, which is perfectly in sync with dollar index clearing out the liquidity above the market. It would just make more sense for them to continue lower from where they're at now versus pulling all the way back up to go for the daily liquidity. Okay, once we get below the daily liquidity here at 1220, then we'll have to see whether or not they want to put it back in the consolidation or if they want to take it higher, okay, or even take it lower. We can get a much deeper expansion from 1220 if we get a nice bearish candle closing below there. But if you guys look at the price action we've seen here, we've consolidated, we came all the way up, ran the liquidity above here, market trades lower, come all the way back up one final time, right, into resistance, forming a lower high, lower than the previous high, then the market starts selling off. So now, if you're looking for bearish price action, the next thing we'll be looking for is a low that forms lower than the 13 big figure, which is this low. And if you guys refer back to most of the live sessions inside the premium group I've done recently, you will see that we've been mentioning this 1.13 big figure as a target on the downside for euro dollar. Okay, this is the reason why. We're looking at daily liquidity. We've got a big daily candle here. The market traded higher after that, so anyone who bought this market has their stop loss trailed below this low. Anyone who bought the market below here trailed their stops below here, then here. So there's liquidity resting below all of these levels. Okay, so first objective on the downside for euro dollar for this week will be 1.13 big figure with a continuation down to 1.1270 and then a continuation down to 1220. Okay, so if you're wondering what my objectives and what my targets for the week on this specific pair, euro dollar, you want to write down 1.13 big figure, which is 20 pips from where we're at now, 1.1270, which is 50 pips from where we're at right now, and then 1.1220, which is 100 pips from where we're at now. Okay, so somewheres within that move, you guys should be looking for sell setups. So you're going to look for the market to trade into resistance. You're going to look for the market to break market structure. You're going to look for the market to form bearish price action off of key levels. Okay, all on this move down. Right? It could be anywhere. So you can sell it once we get below the low here. You could sell it once we get below the low here. Wherever you see the price action forming, that's where you take the position. Okay, my ultimate target for the week will be 1.1220. So with that being said, there's a 100 pip range between where we're at now and here. So any push higher, you're going to look to sell any rallies higher. So as the market trades higher, as it trades into resistance, right, after we've broken market structure and we're trading back up into resistance, whatever the pattern is that you trade, you're going to be looking for lower prices. So if the market's pushing higher, you're going to look to sell into that because it's likely a manipulation and a fake out. Alright, so in summary, my objectives for euro dollar for this week will be bearish, right? I'll be looking for lower prices. First target, 13 big figure. Second target, 1270. Third target, 1.1220. 100 pip range overall. Okay, so this is provided before the fact. You guys are seeing this now, right? Or you're seeing it a few hours after the recording. And with that being said, observe the charts at the end of the week and see if we've gone below 1220. Okay, if we have, that means there was a 100 pip trade within here that I've given to you before the fact that you just had to find a position for yourself, right? The hard part isn't finding the entries. The hard part is determining the direction of where the market is heading, right? So I've given you that. Now you just look for the entry opportunity that suits your trading plan, that fits your trading model. For me, I'm more of a day trader, right? So I'll probably be looking for a continuation below 13 big figure. As we break below here, I'll look for a retest of that level, then I'll sell it short down to the daily equal lows at 1270. That'll give me 30 pips to lock in my profit. I'll move my stop loss to break even at that point, so I'll have no risk on the trade, and I'll go for a continuation down to 1220. Okay, so I'll be removing a portion here at 1270, and I'll be removing the remaining portion at 1220. That's how I'll play it. Some of you may want to sell it as soon as the market opens and target 1220 and capture a full 100 pips. That may suit your model. Some people may want to go in and scalp 20 pips down below this low, right? Then they may get out. Then they may scalp another 30 pips down to this level. Then they may get out again and scalp another 30 pips or another 50 pips down to this level, right? It's just whatever suits your trading model best. Everyone's going to trade differently. You know, we can all have the same outlook on the market, but everyone's going to trade just a little bit differently, and that's because we're all going to see the markets slightly different. We can use the same tools and same techniques and all that, but no matter what, we're all individuals and we're all different human beings, so we're going to see the markets slightly different than, you know, the person sitting next to us, for example. Alright, so that's my viewpoint on euro dollar. Now we'll jump into British pound. Alright, and for British pound, this is one of the ones that we have been pretty much sitting on the sidelines, and we haven't really been taking action on this specific pair. And the reason being is because it's unclear to me as to what they're doing in terms of both a weekly and a daily perspective. So if we take a look on the weekly, you guys can see that we've clearly came down here, right? We've been in a bearish trend. Market had a high, formed a low, came back up, hit resistance, sold off, came back up, formed one more lower high, sold off again, gave us a lower low. Market pushed higher, big ugly long wick here. Market pushed up, failed to break a higher high yet. Now we're coming back down and basically just retesting, what could be a support at the 1.29-ish level, right? So in terms of the upside, I'll be looking for a continuation up to 32 big figure and then potentially 33 big figure. And the reason because of that is we've got this weekly high here that comes in at 1.3280. High comes in at 1.3298, sorry. So basically 1.33 big figure. And if we come down to a daily, you guys can pretty much see that in terms of what's clearer, both to the upside or both to the downside, it's kind of hard to tell, right? Because we're in a consolidation. There's no real indications, right, like there are for both USD and for euro dollar, right? We can clearly see that euro wants to reach lower, and we can clearly see that dollar wants to reach higher in terms of pure price action. Now looking at this, we're relatively in a consolidation. So looking at a chart like this, it's going to take more experience to pretty much identify what they're doing, right? So for me, I kind of have the idea that, while euro dollar can continue trading lower and dollar index can continue trading higher, which if dollar index is trading higher, that should automatically put this, us on the bearish side for this particular currency. Now for me, I'm not necessarily bearish British pound. I'm bullish to slightly consolidated, right? So what I mean by that is if we're going to go higher, we should do so now. So everything in terms of the downside has been achieved, in my opinion. If they're going to take this thing higher, this market should open up for the week and we should just automatically start trading higher. There should be no real reason for them to come back below Thursday's low. Okay, so Thursday's low comes in at 28.54. Right, so something you can do is just mark a little line, and you can make this like bright red. Right, and let's get the level 28.54. We'll just use 28.55, even number. Well, not even number, but even 5 level. So that's going to be kind of our last line, right? So if the market does push below here, obviously we have to assume that they're either going to continue lower or they're going to continue consolidating. Now, if we remain above here, right, and we start breaking higher, say we get above 1.30 big figure, and I can't remember if I mentioned this in the last weekly technical, so I'm not sure if you guys that watch this on YouTube got access to this, but the premium group had access to a video where I talked about this 1.30 big figure level, and basically what I said was if we can break above 1.30 big figure, right, with a daily candle, I'll be looking for the market to come back down and retest that level. It can do it on an intraday basis or on the following day, right, or the following few days. From there, I'll be looking for a continuation higher. So what this means is I want to see the market break above 1.30 big figure on a daily candle. So I want to see a bullish daily candle close above 1.30 big figure. If we get that, I'll be looking for the market to come back down and retest. There can be some level of support that forms within here. It can just simply come back down to 1.30 big figure and use this as support. But as that happens, I'm going to be looking for the market to give me bullish price action off of this level. So that could be on a 5 or 15 minute time frame. I want to see the market forming higher highs and higher lows right at or around this 1.30 big figure. If I get that, it can be a potential swing trade for a buy up into the 1.3250 to 1.33 big figure. Now, depending on any trades that I take in euro will determine whether or not I'm going to be actively trading this pair this week. Now, we do have a lot of high impact news events coming up for this particular pair. So this could be one of the ones where we do see a lot of volatility in terms of the upside. So we can see 300 to 350 pips would be our targets from where we're at now. We can easily see that on British pound for the week, right? I'm not talking about this happening tomorrow on Monday, but this could happen over the course of this upcoming week. We can see this market get all the way back above 32.50 and potentially up into 33 big figure. So we could see a 300 pip week potentially, but I'm not going to be touching this until we have at least proven that we want to go higher. Okay, so that proof to me would be above 1.30 big figure. I'll buy it on the retest. Okay, and I'll be closing partial profits as we go higher, right? So once we get from 30 big figure to 31 big figure, that's 100 pips. I'm locking in 80% of the trade, right? So if I have one standard lot, I'm locking in 8 minis as soon as I hit 100 pips, for example. Really, as soon as I hit 50 pips. All right, because that's pretty much that's a full week for me. I'm looking for 50 pips on the minimum side to achieve my weekly goal. Okay, so if I get 100 pips, I'm for sure knocking down a solid portion of that trade. Once that happens, I can trail my stop loss up, so I can either move it to break even for risk, or I can place my stop loss in profit, say 20 to 30 pips. So if the market does come back down, I'll for sure, no matter what, have already locked in 80% at 100 pips, and I'll be locking in, an additional 20 to 30 pips if the market does come back down and stop me out. So I would have no risk on the trade at that point. So I wouldn't care whether or not we got to 32.50 or 33 big figure. I've already gotten myself paid for the week. You guys want to have the same objectives. You go into the market with the expectation of certain levels getting hit. But when you're in a trade, you don't want to, kind of neglect that trade and just think, I'm holding on for dear life. I'm not closing off partials. I'm holding it from 1.30 big figure to 1.33. Now, that can be your particular trading model, but if that's the case, you need to be very cautious of the advice that you take from me. Because with that being said, if you're a swing trader, you're not going to want to move your stop loss into profit. right? As a swing trader, your stop loss would have to stay below Thursday's low at very minimum until we got above 1.32 big figure, right? So, you're already risking roughly 100 pips, right? And that's what a swing trader does. They're risking 100 pips for 200 to 300 pips, right? So 2 to 1. Same as a scalper, you're risking maybe 10 to 15 pips for 30 to 45 pips. Still 1 to 2 in terms of risk to reward, but you will see much larger gains in terms of pips on these higher time frames. So what I like to do as a day trader, I like to get myself positioned in potential swing moves, so moves that will be larger, but I also look to capitalize on them on a daily / intraday basis. So you'll see that here, once we get above 1.30 big figure, I can go long on the retest, target 1.31 big figure, lock in 100 pips, and basically just have my remaining portion of the position in profit, and I'll be holding a small percentage of the trade to see if we get above 32.50 and 33 big figure, which will allow me to catch that full swing, which would be 200 to 300 pips, but I would have already paid myself a portion of the trade because of my particular trading model. Alright, so that is really about it for British pound. So I will just do a recap because I know I probably may have confused a few of you just by all the stuff I just said, but basically the short of it is I'm looking for GBP USD to get above 1.30 big figure, retest that level with a, obviously I want to see it break above that with a daily candle, and then I'll be looking for that retest on either an intraday or a daily basis, meaning I can use a daily all the way down to a 15-minute chart to see where that retest will happen. Once I buy it, I'll be looking for 32.50 and 33 big figure. Now, I want you guys to take into account that typically I am only trading pairs in sync with the dollar index, right? So I'm more likely to trade euro dollar this week. But if the scenario that I believe could unfold for GBP happens, it will be a potential position trade for me. So it will be a little bit longer of a trade. It won't occur in 1 day. It may occur in 3 to 5 days. Okay, so this is really the only reason I'm looking at this, but I'm not going to, I don't want you guys to think I'm only focusing on this because it could provide 250 to 300 pips. That's not the case. I'm primarily looking at euro dollar because that is the one that is following my trading plan right now. Meaning dollar index is pushing higher, euro dollar is pushing lower. This one has not really shown that, right? We've maintained consolidation, but an overall bullish trend. So this is just more so purely on technicals, manipulation based on what's going on with Brexit and all the upcoming high impact news releases for this particular currency. That's what leads me to the expectation of seeing higher prices. Now, if we never get above 1.30 big figure and we get below Thursday's low, I'm not going to do anything with this pair. I'm just going to sit here and I'll observe it for the week, but I'm not going to trade it at all. I'll just primarily focus on euro dollar. Okay, so I just want that to be clear for you guys. So let me move to the last pair, which is euro GBP, and this will give you guys some context as to kind of my thoughts on both euro and British pound. So we already know that we've got the liquidity resting above the market at 90.95. We know we got the liquidity resting below the market at 86.20, and 50% of that will come in at 88.58. Okay, so as long as we remain below this 50% point, which we have still shown probable, right? So we've come back up into resistance. We've started to sell off. So my expectation for this pair will be to remain either in a consolidation or trade lower for the 86.20 level. Okay, so now let's think about this now. If I'm going to be a seller of euro, does that make sense with my outlook on this particular pair? Yes, because this pair is euro GBP. If we're going lower, that means the euro is weaker than the British pound. So selling euro would be logical. Now, if I'm looking at this and I'm expecting lower prices and I want to be a buyer of British pound, would that make sense? Yes. Okay, now the reason because of that is euro is trading lower, meaning the euro is weaker than the British pound. So if the euro is weaker than the British pound, that obviously means what? The British pound is stronger than the euro. So with that being said, we can look for potential higher prices on British pound. So this is kind of what's got me leaning more so towards the side of selling euro and buying GBP. Because if this thing keeps pushing lower, that will provide the opportunity for longs on British pound and shorts on euro. So that is why I use this particular currency as well. Because once you have the context of what's going on in the market, meaning you know where the highs are, where the liquidity is above the market, you know the liquidity below the market, then you just simply take a fib. And this isn't for entries or anything like that. This is just to figure out where are they at in terms of current market price and where are they likely to reach for. So you draw a fib from highs to lows. You can see that we've got 50% of the range that comes in at 85.73. So we can delete the fib, 50% of the range. As long as we remain below here, we should continue lower. Now, if we get above